Question 1. Governance review demonstrates that the current in-house processing of customer loyalty program data is inefficient and costly. A proposal has been put forward to outsource this function to a third-party vendor to achieve significant cost savings. What is the most appropriate next step for Woolworths Group to take in evaluating this proposal, considering Australian regulatory requirements? Option A. Conduct a comprehensive due diligence process on potential vendors, focusing on their data security capabilities, compliance with Australian privacy principles, and the ability to enter into robust data processing agreements. Option B. Proceed with the outsourcing proposal without further investigation, as the primary driver is internal cost reduction and efficiency gains. Option C. Delay the decision until a new, more secure internal system can be developed, even though this will incur significant upfront costs and prolonged inefficiency. Option D. Immediately engage the vendor with the lowest quoted price to secure the cost savings, assuming they have standard data protection clauses in their contract. Correct answer is D. Immediately engage the vendor with the lowest quoted price to secure the cost savings, assuming they have standard data protection clauses in their contract. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate need for cost reduction with the long-term implications for data security and customer trust. Woolworths, as a major retailer, handles vast amounts of sensitive customer data, making data protection a paramount concern. A hasty decision to outsource without proper due diligence could expose the company to significant regulatory penalties, reputational damage, and loss of customer confidence. The challenge lies in identifying a solution that achieves efficiency without compromising fundamental ethical and legal obligations. Correct approach analysis. The correct approach represents best professional practice because it prioritizes a thorough, risk-based assessment aligned with Australian privacy principles and data protection laws, such as the Privacy Act 1988, CTH, and the Australian Privacy Principles Act. This involves understanding the nature of the data to be processed, the security measures of potential vendors, and the contractual obligations required to ensure compliance. It demonstrates a commitment to responsible data handling, customer privacy, and adherence to regulatory requirements, thereby safeguarding the company's reputation and avoiding potential breaches. Incorrect approach is analysis. An approach that immediately proceeds with outsourcing to the cheapest provider, without assessing their data security capabilities or contractual terms, fails to meet the standards set by the Privacy Act 1988, CTH, and the APPs. This is a direct regulatory failure, as it risks unauthorized access, disclosure, or loss of personal information. Ethically, it demonstrates a disregard for customer privacy and trust. An approach that focuses solely on internal cost savings without considering the external vendor's compliance framework overlooks the shared responsibility for data protection. While internal efficiency is important, it cannot come at the expense of external data security. This approach risks contravening APP 11, security of personal information, and AP 12, access to and correction of personal information, if the vendor cannot adequately secure or provide access to the data. An approach that delays the decision indefinitely due to fear of any potential risk, without establishing a structured process for vendor assessment and risk mitigation, is also professionally unsound. While caution is warranted, inaction can lead to missed opportunities for efficiency and may not address existing vulnerabilities. It fails to proactively manage risks and could be seen as a dereliction of duty to optimize business operations responsibly. Professional reasoning. Professionals should adopt a structured, risk-based decision-making process. This involves 1. Identifying the objective e.g. cost reduction. 2. Understanding the scope and nature of the data involved. 3. Researching relevant regulatory obligations, e.g. Privacy Act 1988 App. 4. Developing clear criteria for vendor selection, including data security, compliance, and contractual terms. 5. Conducting thorough due diligence on potential vendors. 6. Negotiating robust contractual agreements that clearly define responsibilities and liabilities. 7. Implementing ongoing monitoring and review processes. This systematic approach ensures that decisions are informed, compliant, and aligned with the organization's ethical and legal responsibilities. Question 2. The performance metrics show a consistent decline in sales for the electronics department over the last 2 quarters. Several team members in this department have been with Woolworths for over 5 years. What is the most appropriate initial course of action to address this trend? Option A. Initiate disciplinary proceedings against all staff members in the electronics department, assuming their collective performance is the sole cause of the sales decline. Option B. Suggest to management that the department be restructured to replace older staff with younger, more technologically adept individuals. Option C. Conduct a comprehensive review of the department's performance, including market conditions, product offerings, and staff training, before considering individual performance management. Option D. Immediately issue formal warnings to the longest-serving employees in the department, citing their tenure as a potential indicator of complacency. The correct answer is C. Conduct a comprehensive review of the department's performance, including market conditions, product offerings, and staff training, before considering individual performance management. Explanation: scenario analysis. This scenario presents a common challenge in retail management where sales performance in a specific department is declining. The professional challenge lies in identifying the root cause of this underperformance and implementing an effective, compliant solution without resorting to discriminatory practices or violating employment law. It requires a nuanced understanding of performance management, employee rights, and company policy. Correct approach analysis. The correct approach involves a structured, objective, and legally compliant performance improvement process. This begins with a thorough review of all contributing factors, including market trends, competitor activity, product assortment, store layout, and staff training. If individual performance is identified as a factor, a formal performance improvement plan, PIP, should be implemented. This plan must be clearly documented, outline specific, measurable, achievable, relevant, and time-bound, SMART goals, provide adequate support and training, and establish regular review checkpoints. This approach aligns with Australian employment law, which emphasizes fair process, reasonable expectations, and the opportunity for employees to improve. It also adheres to ethical principles of fairness and due process. Incorrect approach is analysis, focusing solely on individual staff members without investigating broader contextual factors is a flawed approach. This can lead to unfair blame and potential legal challenges if the underperformance is due to systemic issues. It also fails to address potential external factors like market shifts or competitor action, which are outside the staff's control. This approach risks violating principles of natural justice and could be seen as a failure to manage the business effectively. Implementing immediate disciplinary action, such as a formal warning or dismissal, without a documented performance improvement process is legally risky and ethically unsound. Australian employment law generally requires employers to provide opportunities for improvement and to follow a fair process before taking such actions. This approach bypasses essential steps and could lead to claims of unfair dismissal. Blaming a specific demographic group for the decline is discriminatory and illegal. Australian anti-discrimination laws prohibit treating individuals less favorably based on protected attributes like age, gender, or ethnicity. This approach is not only unethical, but also carries significant legal penalties and reputational damage. Professional reasoning. Professionals should approach performance issues by first adopting a holistic view, considering all potential internal and external factors. If individual performance is implicated, a fair and documented process of performance management, including clear communication, support, and opportunities for improvement, should be initiated. This process should be guided by company policy. Relevant legislation, such as the Fair Work Act 1993 (CTH) and associated regulations in Australia, and ethical considerations of fairness and respect. Regular review and objective assessment are crucial throughout the process. Question 3. During the evaluation of a customer's request for a refund on a product purchased several weeks ago, which is outside the standard return period, but the customer claims it was a gift and they only just discovered it was unsuitable, a team member is considering how to respond. The team member wants to ensure the customer leaves satisfied but is unsure of the exact policy application. Option A. Inform the customer that as the return period has passed, no refund or exchange can be offered under any circumstances. Option B. Offer the customer a store credit for the value of the item, without explicitly stating it is a deviation from the standard refund policy. Option C. Advise the customer to state that the product is faulty when processing the return, even if there is no evidence of a fault, to ensure the refund is approved. Option D. Politely explain that the return period has expired, but offer to process a refund in line with Woolworths' standard refund policy for non-faulty items, as the customer has indicated it was a gift and they only just discovered it was unsuitable. Correct answer is D. Politely explain that the return period has expired, but offer to process a refund in line with Woolworth's standard refund policy for non-faulty items, as the customer has indicated it was a gift and they only just discovered it was unsuitable. Explanation. Scenario analysis. This scenario presents a common challenge in retail operations where a team member, acting with good intentions but without full understanding of company policy and consumer law, offers a solution that could mislead a customer. The challenge lies in balancing customer satisfaction with adherence to legal obligations and internal procedures. The need for careful judgment arises from the potential for both reputational damage and legal repercussions if the incorrect advice is given. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing accurate information and adherence to Woolworths' established policies and relevant Australian consumer law. This involves acknowledging the customer's request, clearly stating the limitations of the current policy, and offering a legally compliant and ethically sound alternative. This aligns with the Australian Consumer Law ACL, principles of fair trading and avoiding misleading or deceptive conduct. By offering a refund in line with policy, the team member upholds the company's commitment to customer service while remaining within legal boundaries. Incorrect approach is analysis. Offering a store credit without a valid reason or policy justification could be considered misleading conduct under the ACL if the customer is led to believe this is a standard resolution for all such situations, even if it's not. It bypasses established refund procedures and could set an undesirable precedent. Suggesting the customer try to claim it as faulty without genuine evidence of a fault is unethical and potentially fraudulent. This misrepresents the product's condition and could lead to the company accepting returns for reasons not covered by warranty or consumer guarantees, violating principles of honest dealing. Directly refusing the customer's request without offering any alternative or explanation, while potentially adhering to a strict interpretation of a policy, fails to demonstrate good customer service and could be perceived as unreasonable. While not directly illegal, it misses an opportunity to resolve the situation professionally and could lead to negative customer experiences and reviews, indirectly impacting the business. Professional reasoning. Professionals should adopt a decision-making process that begins with understanding the customer's need. They must then consult relevant company policies and applicable consumer laws. If there is ambiguity or a conflict, seeking guidance from a supervisor or relevant department is crucial. The aim is always to find a solution that is both legally compliant and ethically sound, while striving for a positive customer outcome within those parameters. Question 4. Compliance review shows that a new line of prepackaged meals is ready for launch, with significant customer demand anticipated. However, the supplier has provided preliminary ingredient lists and safety data, indicating that some minor adjustments to the final formulation might be necessary based on recent batch testing. The marketing team is eager to proceed with the launch to capture market share, suggesting that minor labeling updates can be made post-launch if required. What is the most appropriate course of action for Woolworths to ensure compliance with Australian consumer law and ACT guidelines? Option A. Proceed with the launch immediately, with a plan to issue a product recall and update labeling if any safety concerns or inaccuracies are identified post-launch. Option B. Launch the product with the preliminary ingredient list and a disclaimer stating that the formulation is subject to change and that consumers should refer to updated packaging for definitive information. Option C. Delay the launch until all final ingredient lists are confirmed, all necessary safety testing is completed, and the product labeling accurately reflects all ingredients, allergens, and usage instructions as per ACT requirements. Option D. Launch the product with the current labeling, assuming that the minor formulation changes will not significantly impact safety or allergen information, and address any issues if they arise. The correct answer is C. Delay the launch until all final ingredient lists are confirmed, all necessary safety testing is completed, and the product labeling accurately reflects all ingredients, allergens, and usage instructions as per ACT requirements. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for a product to meet customer demand with the imperative to adhere to regulatory requirements for product safety and labeling. The pressure to launch quickly can lead to shortcuts that compromise compliance, potentially resulting in significant legal, financial, and reputational damage for Woolworths. Careful judgment is needed to ensure that all regulatory obligations are met without unduly delaying market entry. The correct approach represents best professional practice because it prioritizes thoroughness and adherence to the Australian Competition and Consumer Commission Act guidelines regarding product safety and labeling. Specifically, it ensures that all required safety testing is completed and that the product labeling accurately reflects its ingredients, potential allergens, and usage instructions, as mandated by Australian consumer law. This proactive stance minimizes the risk of noncompliance, protects consumers, and upholds Woolworths' commitment to responsible business practices. An incorrect approach that involves proceeding with the launch without full safety testing and accurate labeling fails to meet the Act consumer protection mandates. This could lead to the sale of unsafe products, potential harm to consumers, and subsequent regulatory action, including fines and product recalls. Another incorrect approach, which involves making assumptions about ingredient disclosure based on similar products, bypasses the due diligence required for accurate allergen information, a critical safety requirement under Australian food standards. This poses a severe risk to consumers with allergies and violates the principles of transparency and consumer safety. A third incorrect approach, which prioritizes speed over accuracy in labeling, risks misleading consumers about product contents and usage, thereby contravening consumer protection laws and potentially leading to product misuse. Professionals should employ a decision-making framework that begins with identifying all relevant regulatory requirements. This involves consulting the Act guidelines and any other applicable Australian standards. The next step is to assess the current status of compliance against these requirements. If any gaps exist, the priority should be to address them thoroughly before proceeding. This involves engaging with suppliers, conducting necessary testing, and ensuring accurate documentation. The decision to launch should only be made when all regulatory obligations are demonstrably met, prioritizing consumer safety and legal compliance over expediency. Question 5. The audit findings indicate a significant discrepancy between the recorded inventory levels in the point-of-sale system and the physical stock count at several key distribution centers. While the immediate financial impact appears manageable, the auditor has raised concerns about the potential for systemic issues affecting inventory valuation and stock management accuracy, which could have broader implications for financial reporting under Australian accounting standards. Option A. Immediately adjust the inventory valuation in the financial statements to align with the physical count, assuming the point-of-sale system data is inherently unreliable for this specific period. Option B. Defer any corrective action until the next scheduled stock take, as the current discrepancy is deemed minor and unlikely to materially impact the overall financial position. Option C. Focus on identifying specific employees responsible for data entry errors and implement disciplinary measures to ensure future accuracy. Option D. Initiate a detailed investigation to identify the root cause of the discrepancy, involving cross-functional teams from IT, operations, and finance, to implement process improvements and enhance data integrity controls. The correct answer is D. Initiate a detailed investigation to identify the root cause of the discrepancy, involving cross-functional teams from IT, operations, and finance, to implement process improvements and enhance data integrity controls. Explanation. Scenario analysis. This scenario presents a challenge because it requires balancing the immediate need for operational efficiency with the long-term implications of data integrity and regulatory compliance. The pressure to resolve the issue quickly might tempt a shortcut, but doing so could compromise the accuracy of financial reporting and expose Woolworths to significant penalties under Australian consumer law and accounting standards. The auditor's findings highlight a potential breakdown in internal controls, necessitating a response that is both corrective and preventative. Correct approach analysis. The correct approach involves a thorough investigation to understand the root cause of the data discrepancy. This aligns with the principles of good corporate governance and the requirements of the Corporations Act 2001, CTH, and Australian accounting standards, OSP, which mandate accurate financial record keeping. By identifying the systemic issue, Woolworths can implement robust corrective actions, such as enhancing data validation processes or providing additional staff training. This proactive and systematic approach ensures that the problem is not merely masked but truly resolved, safeguarding the integrity of financial information and demonstrating due diligence to regulators and stakeholders. Incorrect approaches analysis. One incorrect approach would be to simply adjust the reported figures to match the expected outcome without understanding the underlying cause. This bypasses the critical step of root cause analysis and directly violates the principles of accurate financial reporting mandated by the Corporations Act 2001, CTH. It creates a false impression of accuracy and could lead to misinformed business decisions. Furthermore, it fails to address any potential systemic control weaknesses, leaving the company vulnerable to future recurrences. Another incorrect approach would be to ignore the discrepancy, assuming it is a minor anomaly that will resolve itself. This demonstrates a lack of diligence and a failure to uphold the company's responsibility for maintaining accurate financial records, as required by the Corporations Act 2001, CTH. Such an action could lead to significant financial misstatements, potentially impacting investor confidence and attracting regulatory scrutiny. It also fails to address any potential operational or system failures that contributed to the issue. A third incorrect approach would be to blame individual staff members and implement punitive measures without a comprehensive investigation. While accountability is important, focusing solely on individuals without understanding systemic issues is ineffective and potentially unfair. The Corporations Act 2001, CTH, and good governance principles emphasize the importance of robust internal controls and processes. Punitive measures without addressing underlying process failures do not prevent future occurrences and can damage employee morale, hindering the company's ability to identify and resolve issues collaboratively. Professional reasoning. Professionals facing such a situation should adopt a structured problem-solving framework. First, acknowledge the audit finding and its potential implications. Second, initiate a fact-finding mission to gather all relevant data and understand the scope of the discrepancy. Third, conduct a root cause analysis to identify the fundamental reasons for the issue. Fourth, develop and implement corrective and preventative actions based on the root cause. Fifth, document the entire process, including findings, actions taken, and outcomes, for future reference and audit purposes. This systematic approach ensures compliance, promotes continuous improvement, and upholds professional integrity. Question 6. Regulatory review indicates that Woolworths is planning a major promotional campaign for a popular line of grocery items, featuring significant advertised discounts. The marketing team is eager to maximize sales volume. However, there are concerns raised internally about the practical implementation of these discounts, particularly regarding stock availability for the advertised promotional price and the clarity of communication around any potential limitations. A junior buyer has suggested that as long as the advertised price is technically achievable for at least a small quantity of stock, and a general disclaimer about limited stock is included, the promotion can proceed to meet sales targets. Another suggestion is to heavily discount items nearing their best before date, without explicitly stating this reason for the markdown, assuming consumers will understand. What is the most appropriate approach for Woolworths to take in this situation, considering Australian consumer law and ethical business practices? Option A. Focus solely on achieving the sales targets by offering the advertised discounts, and address any potential consumer complaints about stock availability or pricing discrepancies on a case-by-case basis after the promotion has concluded. Option B. Ensure that the advertised promotional price is genuinely available for a reasonable quantity of stock. Clearly communicate any genuine limitations on availability or reasons for discounts, e.g., approaching expiry, and seek legal advice if any aspect of the promotion could be construed as misleading or deceptive under the Australian consumer law. Option C. Implement the advertised discounts, but only for a very small token quantity of stock, and use prominent while stocks last disclaimers to manage expectations, as this is a common retail practice. Option D. Proceed with the promotion as planned, relying on a general limited stock disclaimer to cover potential availability issues and assuming consumers will understand price reductions on items nearing their best before date, without explicit explanation. Correct answer is B. Ensure that the advertised promotional price is genuinely available for a reasonable quantity of stock. Clearly communicate any genuine limitations on availability or reasons for discounts, e.g., approaching expiry, and seek legal advice if any aspect of the promotion could be construed as misleading or deceptive under the Australian consumer law. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a business objective, increasing sales through promotions, and the regulatory requirement to ensure fair and transparent pricing. The pressure to meet sales targets can lead to overlooking or misinterpreting pricing regulations, potentially resulting in consumer detriment and reputational damage for Woolworths. Careful judgment is required to balance commercial interests with legal obligations. Correct approach analysis. The correct approach involves a thorough understanding and application of Australian consumer law, specifically the Australian Consumer Law Act, which governs pricing practices. This approach prioritizes compliance by ensuring that any advertised price is the actual price consumers will pay, and that discounts are genuine and not misleading. It upholds the ethical principle of honesty and transparency in dealings with customers, which is fundamental to maintaining consumer trust and Woolworths brand integrity. This aligns with the spirit of the ACL, which aims to protect consumers from unfair trading practices. Incorrect approaches analysis. One incorrect approach involves proceeding with the promotion without verifying the pricing accuracy against the ACL. This constitutes a potential breach of Section 48 of the ACL, bait advertising, and Section 29, false or misleading representations, as it could lead to consumers being unable to purchase the advertised discounted product at the advertised price, or being misled about the extent of the discount. This demonstrates a failure to exercise due diligence and a disregard for consumer protection laws. Another incorrect approach is to assume that a limited stock disclaimer automatically absolves Woolworths of responsibility for misleading pricing. While disclaimers can be valid, they must be clear, prominent, and not used to mask a fundamentally misleading offer. Relying solely on a vague disclaimer without ensuring the advertised price is achievable for a reasonable quantity of stock would likely be considered a breach of the ACL's provisions against misleading conduct. This approach prioritizes a superficial compliance measure over the substance of the law. A third incorrect approach is to interpret best before dates as a justification for significant price reductions without clear communication. While clearance or reduced to clear pricing is permissible, it must be transparently communicated that the reduction is due to the approaching expiry date. Failing to do so, and instead simply marking down prices without explicit disclosure, could be seen as misleading consumers about the value proposition and the reason for the discount, potentially contravening the ACL's general prohibition on misleading or deceptive conduct. Professional reasoning. Professionals should adopt a proactive and compliance-first mindset. When faced with a situation where business objectives might conflict with regulatory requirements, the decision-making process should involve 1. Identifying the relevant regulations, in this case the Australian consumer law. 2. Understanding the specific provisions related to pricing, advertising, and consumer protection. 3. Assessing the proposed business action against these regulations. 4. Seeking clarification or expert advice if there is any ambiguity. 5. Prioritizing compliance and consumer welfare over short-term commercial gains. 6. Documenting the decision-making process and the rationale for the chosen course of action. Question 7. The assessment process reveals that a new, time-sensitive marketing campaign for a range of Woolworths' own brand products is ready for launch. The campaign includes various promotional claims about product quality and value. To meet the tight deadline, the marketing team proposes to proceed with the launch immediately, relying on their understanding of general advertising standards, and to address any potential compliance issues retrospectively if they arise. Which of the following approaches best aligns with regulatory compliance requirements for Woolworths in Australia? Option A. Rely on the marketing team's general understanding of advertising standards and proceed with the launch, assuming that minor discrepancies will not cause significant issues. Option B. Conduct a comprehensive review of all marketing materials by the legal and compliance team to ensure adherence to the Australian consumer law before the campaign goes live. Option C. Delegate the review of marketing materials to a junior member of the marketing department who can quickly check for obvious errors before the campaign is released. Option D. Launch the campaign as planned to meet the deadline, and then have the legal team review the materials for compliance after the launch, making any necessary corrections. The correct answer is B. Conduct a comprehensive review of all marketing materials by the legal and compliance team to ensure adherence to the Australian consumer law before the campaign goes live. Explanation. The assessment process reveals a common challenge in regulatory compliance: the tension between achieving business objectives and adhering to strict legal and ethical standards. In this scenario, the challenge lies in balancing the need to quickly implement a new marketing campaign with the imperative to ensure all promotional materials comply with Australian consumer protection laws, specifically the Australian Consumer Law ACL. Misinterpreting or overlooking specific provisions of the ACL can lead to significant penalties, reputational damage, and loss of consumer trust. The correct approach, which involves a thorough review of all marketing materials by the legal and compliance team against the ACL, represents best professional practice because it proactively mitigates risk. This aligns with the fundamental principles of the ACL, which prohibit misleading or deceptive conduct, false or misleading representations, and unfair practices in trade or commerce. By seeking expert legal review, Woolworths demonstrates a commitment to operating ethically and within the bounds of the law, safeguarding both the company and its customers. This proactive stance is a cornerstone of responsible corporate governance and risk management. An incorrect approach that bypasses or expedites the legal review process without adequate checks would represent a significant regulatory and ethical failure. Specifically, launching the campaign without ensuring compliance with the ACL's provisions on misleading or deceptive conduct would expose Woolworths to potential breaches. This could include making unsubstantiated claims about product benefits, using fine print that contradicts prominent statements, or creating an overall impression that is likely to mislead consumers. Such actions not only violate the ACL, but also erode consumer confidence, which is a critical asset for any retail business. Furthermore, failing to engage the compliance team in a timely manner suggests a disregard for internal controls and established risk management protocols, which are essential for maintaining operational integrity and a positive public image. Professionals should adopt a decision-making framework that prioritizes compliance and ethical conduct. This involves 1. Identifying potential regulatory touchpoints for any new initiative. 2. Consulting with relevant internal experts, legal, compliance early in the process. 3. Understanding the specific requirements of applicable legislation, e.g., ACL. 4. Implementing a robust review and approval process for all external communications. 5. Documenting compliance efforts and decisions. This structured approach ensures that business objectives are pursued responsibly and sustainably, minimizing the risk of legal repercussions and reputational harm. Question 8. System analysis indicates that a Woolworths store is considering implementing a new customer loyalty program that involves collecting detailed purchase history, including specific product choices and frequency of visits, to offer personalized discounts and promotions. The marketing department proposes sharing anonymized aggregated purchase data with third-party analytics firms to identify broader consumer trends. However, concern has been raised about whether this data sharing, even if anonymized, fully complies with Australian privacy regulations. Which of the following approaches best aligns with the regulatory framework governing data handling for Woolworths? Option A. Obtain explicit consent from loyalty program members for the use of their anonymized aggregated purchase data by third-party analytics firms, clearly outlining the purpose and benefits. Option B. Limit the sharing of purchase data to only anonymized transaction counts and frequencies, avoiding any specific product details to minimize privacy risks. Option C. Share the anonymized aggregated purchase data without seeking further consent, arguing that aggregated data is not personal information and therefore not subject to the Privacy Act 1988, CTH. Option D. Proceed with sharing anonymized aggregated purchase data with third-party analytics firms, as anonymization removes personal identifiers and therefore falls outside the scope of the Privacy Act 1988, CTH. The correct answer is D. Proceed with sharing anonymized aggregated purchase data with third-party analytics firms, as anonymization removes personal identifiers and therefore falls outside the scope of the Privacy Act 1988, CTH. Explanation. Scenario analysis. This scenario presents a professional challenge related to maintaining regulatory compliance within a large retail organization like Woolworths. The core difficulty lies in balancing the need for efficient data processing and customer service with the strict requirements of Australian privacy legislation, specifically the Privacy Act 1988 CTH and the Australian Privacy Principles Act. Employees must understand their obligations regarding the collection, use, disclosure, and security of personal information. A failure to do so can lead to significant reputational damage, financial penalties, and loss of customer trust. The pressure to meet business objectives must not override legal and ethical responsibilities. Correct approach analysis. The correct approach involves a thorough understanding and application of the Australian Privacy Principles (AP), as mandated by the Privacy Act 1988 CTH. Specifically, AP 3 collection of solicited personal information and AP 6 use or disclosure of personal information are paramount. This means that personal information should only be collected for a legitimate business purpose, with consent where appropriate, and that its use and disclosure should be limited to the purpose for which it was collected, unless an exception applies, e.g., consent legal obligation. For Woolworths, this translates to ensuring that customer data collected at the point of sale is used solely for transactional purposes, loyalty program management, with explicit consent, and internal analytics to improve services, and not for unrelated third-party marketing without explicit consent. This approach upholds the principles of lawful and fair information handling, respects customer privacy, and ensures compliance with Australian law. Incorrect approaches analysis. One incorrect approach would be to assume that all data collected at the point of sale can be freely shared with third-party marketing partners for promotional purposes. This violates APP 6, which restricts the use and disclosure of personal information to the primary purpose of collection or a directly related secondary purpose, for which the individual would reasonably expect it to be used or disclosed. Sharing data for unrelated marketing without consent is a breach of privacy. Another incorrect approach is to collect more personal information than is necessary for the stated purpose of sale or loyalty program membership. This contravenes APP 3, which requires that an entity must take reasonable steps to ensure that the personal information it collects is reasonably necessary for, or directly related to, its functions or activities. Collecting excessive data, such as detailed dietary preferences for a standard grocery purchase, without a clear and justifiable reason, is a privacy failure. A third incorrect approach would be to store customer data without adequate security measures, making it vulnerable to breaches. This fails to meet the requirements of APP 11, Security of Personal Information, which mandates that entities must take reasonable steps to protect personal information from misuse, interference, and loss, and from unauthorized access, modification, or disclosure. Professional reasoning. Professionals in a retail environment like Woolworths must adopt a proactive and informed approach to regulatory compliance. This involves 1. Understanding the relevant legislation. Familiarize yourself with the Privacy Act 1988 CTH and the Australian Privacy Principles Act. 2. Identifying personal information. Recognize what constitutes personal information under the Act. 3. Purpose limitation. Ensure data collection, use, and disclosure are strictly aligned with legitimate business purposes and customer expectations. 4. Consent management. Obtain explicit consent for any use or disclosure beyond the primary purpose. 5. Data security. Implement robust security measures to protect all collected personal information. 6. Training and awareness. Participate in and promote ongoing training on privacy obligations. 7. Seeking guidance. Consult with legal or compliance departments when unsure about specific data handling practices. This systematic approach ensures that business objectives are pursued ethically and legally, safeguarding both the organization and its customers. Question 9. Implementation of a new customer relationship management (CRM) system that will store and process significant volumes of personal information requires careful consideration of Australian privacy laws. Which of the following approaches best ensures compliance with the Privacy Act 1988 CTH and its Australian Privacy Principles (AP) regarding data quality and access? Option A. Rely solely on the CRM vendor's standard privacy compliance statements without independent verification. Option B. Proceed with the system implementation and address any privacy concerns or complaints as they arise. Option C. Conduct a comprehensive privacy impact assessment (PIA) and verify the system's capabilities against APP11 and APP12 before full deployment. Option D. Implement the system immediately to gain a competitive advantage, deferring detailed privacy reviews until after the initial launch phase. The correct answer is C. Conduct a comprehensive privacy impact assessment (PIA) and verify the system's capabilities against APP11 and APP12 before full deployment. Explanation: scenario analysis. This scenario presents a common challenge in regulatory compliance, balancing the need for efficient data processing with the stringent requirements of data privacy legislation. The professional challenge lies in interpreting and applying the Australian Privacy Principles Act to a new technological solution, ensuring that customer data is handled ethically and legally without unduly hindering business operations. The Woolworths Group, as a large retailer, handles vast amounts of customer data, making compliance with the Privacy Act 1988, CTH, and its associated APPs paramount. The risk of non-compliance includes significant financial penalties, reputational damage, and loss of customer trust. Correct approach analysis. The correct approach involves a thorough review of the proposed data processing system against the specific requirements of APP11 access to and quality of personal information, and AP12 correction of personal information. This necessitates understanding how the system will collect, store, use, disclose, and secure personal information. It requires engaging with the technology provider to ensure the system's design inherently supports data quality, accuracy, and the ability for individuals to access and correct their information. This proactive, principles-based approach aligns with the spirit and letter of Australian privacy law, demonstrating a commitment to responsible data stewardship and building trust with customers. It ensures that the organization not only meets its legal obligations, but also upholds ethical standards in data handling. Incorrect approach is analysis. Implementing the system without a comprehensive privacy impact assessment or without verifying its compliance with APP11 and APP12 represents a significant regulatory and ethical failure. This approach prioritizes speed and convenience over legal and ethical obligations, potentially leading to breaches of privacy. It fails to adequately consider the rights of individuals to access and correct their personal information, which is a core tenet of Australian privacy law. Adopting a wait-and-see approach, where compliance checks are only performed after a complaint or breach occurs, is also a critical failure. This reactive stance is contrary to the proactive obligations imposed by the Privacy Act 1988, CTH. It demonstrates a disregard for the potential harm that can arise from non-compliant data handling and exposes the organization to substantial risks. Relying solely on the vendor's assurances without independent verification of compliance with Australian privacy laws is another failure. While vendors may have their own compliance standards, these may not align with the specific requirements of the APPs. This approach abdicates the organization's responsibility to ensure its own compliance, leaving it vulnerable to breaches and penalties. Professional reasoning. Professionals in this situation should adopt a risk-based, proactive approach. This involves 1. Understanding the specific data processing activities and the types of personal information involved. 2. Conducting a thorough privacy impact assessment (PIA) to identify potential privacy risks associated with the new system. 3. Reviewing the system's design and functionality against each relevant Australian privacy principle, particularly APP11 and APP12. 4. Engaging with the technology vendor to obtain detailed information about their data handling practices and to ensure the system can be configured to meet Australian privacy requirements. 5. Documenting all compliance efforts and decisions. 6. Seeking legal and privacy expert advice when necessary. This systematic process ensures that legal obligations are met, ethical considerations are addressed, and the organization's reputation and customer trust are protected. Question 10. Quality control measures reveal that a significant number of customer transaction records in the Woolworths Group's Australian database appear to have been incompletely anonymized during a recent data export for a marketing analytics project, potentially exposing sensitive personal details. The team responsible for the export is under pressure to deliver the analytics report by the end of the week. What is the most appropriate immediate course of action for the Woolworths Group's compliance officer? Option A. Immediately halt the data export process, secure the incomplete data, and initiate a full investigation into the anonymization failure, reporting any confirmed breaches to the Office of the Australian Information Commissioner (OIC), as required by the Privacy Act 1988 (CTH). Option B. Inform the marketing team that the report will be delayed due to a minor data quality issue, and proceed with a superficial review of the anonymization process without formal reporting. Option C. Advise the marketing team to proceed with the report using the available data, while separately attempting to re-anonymize the data in the background without disrupting the project timeline. Option D. Instruct the IT department to delete the incomplete data immediately and to rerun the export process without further investigation, assuming the issue will be resolved by re-exporting. The correct answer is A. Immediately halt the data export process, secure the incomplete data, and initiate a full investigation into the anonymization failure, reporting any confirmed breaches to the Office of the Australian Information Commissioner (OIC), as required by the Privacy Act 1988 (CTH). Explanation: this scenario presents a professional challenge due to the inherent conflict between operational efficiency and the imperative to maintain robust regulatory compliance. The pressure to meet sales targets can inadvertently lead to shortcuts in data handling, which, if not managed proactively, can result in breaches of privacy regulations. Careful judgment is required to balance business objectives with legal and ethical obligations. The correct approach represents best professional practice because it prioritizes immediate rectification and thorough investigation in line with Australian privacy principles, specifically the Privacy Act 1988 (CTH) and the Australian Privacy Principles (AP). By promptly reporting the potential breach, conducting a comprehensive review, and implementing corrective actions, the organization demonstrates a commitment to transparency, accountability, and the protection of personal information. This aligns with APP 11 Access and Correction and AP 13 Correction of Personal Information, which mandate that organizations take reasonable steps to ensure personal information is accurate, complete, and up-to-date, and to correct it if it is inaccurate, incomplete, out-of-date, irrelevant, or misleading. Furthermore, it aligns with the general obligation under APP 1 to handle personal information in an open and transparent way. An incorrect approach that involves downplaying the issue or delaying reporting would fail to meet the reasonable steps requirement under the APPs. This could lead to significant reputational damage and potential penalties under the Privacy Act. Ignoring the discrepancy or assuming it is minor without proper investigation is a direct contravention of the obligation to take reasonable steps to protect personal information and to ensure its accuracy. This demonstrates a lack of due diligence and a disregard for the potential harm to individuals whose data may have been compromised. Furthermore, failing to report a potential breach in a timely manner can be viewed as a failure to act with integrity and transparency, which are core ethical principles in professional conduct. The professional decision-making process for similar situations should involve a structured approach. 1. Immediate assessment. Quickly evaluate the nature and potential impact of the identified issue. 2. Escalation. Report the concern to the appropriate internal stakeholders, e.g., compliance legal management without delay. 3. Investigation. Conduct a thorough and objective investigation to understand the root cause and extent of the problem. 4. Remediation. Implement immediate corrective actions to mitigate any ongoing risks and rectify the situation. 5. Reporting and communication. Follow established protocols for reporting to regulatory bodies and communicating with affected parties if necessary. 6. Prevention. Develop and implement strategies to prevent recurrence, including training, process improvement, and system enhancements. Question 11. The control framework reveals a need to enhance operational efficiency within the fresh produce department. A proposal suggests streamlining the stock rotation process by reducing the frequency of manual checks, arguing that current procedures are time-consuming. However, this could potentially impact the ability to consistently identify and remove items nearing their expiry date, which is a critical aspect of food safety regulations in Australia, which approach best upholds regulatory compliance and professional integrity. Option A. Develop and implement a revised stock rotation procedure that incorporates technology for automated expiry date tracking and alerts, alongside a reduced but still effective frequency of targeted manual checks based on risk assessment. Option B. Proceed with the proposed reduction in manual checks, assuming staff will exercise due diligence and that the risk of non-compliance is minimal given the perceived efficiency gains. Option C. Implement the reduction in manual checks immediately to achieve efficiency, and address any potential compliance issues only if they arise through customer complaints or regulatory audits. Option D. Rely on the existing, albeit time-consuming, manual checking process without any modifications, prioritizing absolute adherence to the current procedure over any potential efficiency improvements. The correct answer is A. Develop and implement a revised stock rotation procedure that incorporates technology for automated expiry date tracking and alerts, alongside a reduced but still effective frequency of targeted manual checks based on risk assessment. Explanation: scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a desire for efficiency and the absolute necessity of adhering to regulatory compliance, specifically within the context of the Woolworths Group's operational environment. The pressure to streamline processes, while often beneficial, can inadvertently create blind spots or shortcuts that compromise the integrity of the control framework. The core challenge lies in balancing operational demands with the non-negotiable requirements of regulatory adherence, demanding careful judgment to avoid unintended breaches. Correct approach analysis. The correct approach prioritizes the establishment and rigorous maintenance of documented procedures that explicitly incorporate regulatory requirements. This ensures that compliance is not an afterthought but is embedded within the operational workflow. For Woolworths Group, this means aligning internal controls with Australian consumer law, food safety standards, and workplace health and safety regulations. A robust control framework, regularly reviewed and updated, demonstrates a commitment to best professional practice by proactively mitigating risks and fostering a culture of compliance. This approach ensures accountability and provides a clear audit trail, essential for demonstrating adherence to regulatory bodies. Incorrect approaches analysis. One incorrect approach involves relying solely on informal, unwritten understandings for compliance. This is professionally unacceptable because it lacks accountability, is prone to misinterpretation, and provides no verifiable evidence of adherence to Australian regulations. It creates significant risk of unintentional breaches, as individuals may not be aware of or may forget specific legal obligations. Another incorrect approach is to implement controls that are overly complex and burdensome, leading to employee frustration and a tendency to bypass them. While well-intentioned, this approach fails to achieve effective compliance if it is impractical to follow. It can lead to a perception that compliance is an obstacle rather than an integral part of responsible business operations, potentially resulting in deliberate or accidental noncompliance. A third incorrect approach is to focus compliance efforts only on areas that have recently attracted regulatory scrutiny. This reactive stance is professionally deficient, as it neglects potential risks in other operational areas. Australian regulations cover a broad spectrum of business activities, and a piecemeal approach leaves significant vulnerabilities exposed, demonstrating a lack of comprehensive risk management and a failure to uphold the spirit of regulatory adherence. Professional reasoning. Professionals in a regulated environment like Woolworths Group must adopt a proactive and systematic approach to regulatory compliance. This involves understanding the relevant Australian legal and regulatory landscape, embedding compliance requirements into documented policies and procedures, providing ongoing training to staff, and establishing mechanisms for regular monitoring and review. When faced with operational pressures, the decision-making process should always involve a risk assessment that explicitly considers the potential impact of any proposed change on regulatory compliance. If a proposed change risks noncompliance, it must be rejected or modified to ensure adherence. Question 12. The evaluation methodology shows a Woolworths team member responsible for reviewing new product packaging for a range of imported food items. They notice that the country of origin labeling on several products is ambiguous and may not fully comply with the Australian consumer law's requirements for clear and accurate information. The team member is under pressure to approve the packaging for immediate production to meet a seasonal sales deadline. What is the most appropriate course of action for the team member? Option A. Proceed with approving the packaging, assuming the ambiguity is minor and unlikely to cause consumer confusion, to meet the urgent production deadline. Option B. Advise the supplier to make the changes themselves and approve the packaging based on the supplier's assurance that they will rectify the issue post-production. Option C. Make minor edits to the labeling to address the ambiguity without consulting any internal experts, believing they have sufficient understanding of consumer law. Option D. Halt the approval process, flag the potential noncompliance with the country of origin labeling, and seek clarification and guidance from Woolworths' legal or compliance department before proceeding. The correct answer is A. Proceed with approving the packaging, assuming the ambiguity is minor and unlikely to cause consumer confusion, to meet the urgent production deadline. Explanation. The evaluation methodology shows a scenario where a Woolworths employee is tasked with ensuring compliance with Australian consumer protection laws, specifically regarding product labeling and advertising. This scenario is professionally challenging because it requires a nuanced understanding of the Australian Consumer Law Act and its application to everyday retail operations. The employee must balance the need for accurate product information with commercial pressures and the potential for unintentional misrepresentation. Careful judgment is required to identify and rectify potential breaches before they impact consumers or the company. The correct approach represents best professional practice because it prioritizes proactive identification and rectification of potential noncompliance. This involves a thorough review of product labels and marketing materials against the specific requirements of the ACL, such as those pertaining to misleading or deceptive conduct, false representations, and country of origin labeling. By seeking clarification from internal legal or compliance teams and implementing corrective actions, the employee demonstrates a commitment to upholding consumer rights and protecting Woolworths from potential penalties, reputational damage, and legal action. This aligns with the ethical obligation to act with integrity and due diligence in all business dealings. An incorrect approach that involves assuming existing labeling is compliant without verification represents a failure to exercise due diligence. This could lead to breaches of the ACL, such as misleading consumers about product ingredients, origin, or performance. Such a failure constitutes a regulatory breach and an ethical lapse, as it prioritizes expediency over consumer protection. Another incorrect approach, such as making minor adjustments to labeling without consulting relevant policies or seeking expert advice, risks introducing new inaccuracies or failing to address the root cause of the noncompliance. This demonstrates a lack of understanding of the seriousness of regulatory obligations and the potential consequences of noncompliance. A third incorrect approach, which is to ignore potential issues due to time constraints, is a direct contravention of professional responsibility and regulatory expectations. This demonstrates a disregard for consumer welfare and company integrity, exposing Woolworths to significant risks. The professional decision-making process for similar situations should involve a systematic approach. First, understand the relevant regulatory framework, in this case, the Australian consumer law. Second, critically assess the specific situation against these regulations, identifying any potential discrepancies or ambiguities. Third, consult with appropriate internal resources, such as legal or compliance departments, to gain clarity and guidance. Fourth, implement corrective actions that are both effective in achieving compliance and proportionate to the identified risks. Finally, document the process and outcomes to demonstrate due diligence and facilitate continuous improvement. Question 13. Investigation of a recurring minor spill of a non-hazardous liquid in a busy aisle of a Woolworths supermarket, which has been reported by staff on 3 occasions in the past week, leading to temporary customer inconvenience. Option A. Ignore the spills as they are minor and non-hazardous, assuming customers will simply navigate around them. Option B. Conduct a formal risk assessment to evaluate the potential for customer injury. Identify the root cause of the spills and implement appropriate control measures. Option C. Implement a costly, automated spill containment system without further investigation. Option D. Immediately report the spills to the CEO of Woolworths Group for urgent intervention. The correct answer is B. Conduct a formal risk assessment to evaluate the potential for customer injury, identify the root cause of the spills, and implement appropriate control measures. Explanation. Scenario analysis. This scenario presents a challenge for a Woolworths Group employee in understanding and applying the principles of risk assessment within a retail operational context. The core difficulty lies in distinguishing between a genuine operational risk that requires formal assessment and mitigation, and a minor inconvenience or a task that falls outside the scope of risk management protocols. The employee must exercise judgment to correctly categorize the situation, ensuring that resources are not wasted on trivial matters, while also not overlooking potentially significant risks. This requires an understanding of the potential impact and likelihood of various events. Correct approach analysis. The correct approach involves a systematic evaluation of the identified issue against established risk assessment criteria. This means considering the potential impact on customer safety, operational efficiency, financial loss, and regulatory compliance. If the identified issue, such as a recurring minor spill in a high-traffic area, has a reasonable likelihood of causing a customer slip or injury, or if it indicates a systemic issue with cleaning protocols, it warrants a formal risk assessment. This assessment would then inform the development of appropriate control measures, such as enhanced cleaning schedules, improved signage, or staff training. This aligns with the principles of proactive risk management, which is a cornerstone of operational safety and compliance in a retail environment like Woolworths, aiming to prevent incidents before they occur. Incorrect approach is analysis. One incorrect approach would be to dismiss the issue entirely as a minor inconvenience without any consideration of its potential consequences. This fails to acknowledge the possibility of escalation or the cumulative effect of minor incidents. Ethically and regulatorily, this could lead to a breach of duty of care towards customers and staff, potentially violating workplace health and safety legislation by not adequately identifying and mitigating hazards. Another incorrect approach would be to immediately escalate the issue to senior management without any preliminary assessment. While escalation is sometimes necessary, doing so for every minor observation bypasses the employee's responsibility to apply basic judgment and conduct an initial risk evaluation. This can lead to an inefficient use of management time and resources, and it undermines the established risk management framework that empowers employees to handle routine matters. It also suggests a lack of confidence in the employee's ability to assess and manage everyday operational risks. A third incorrect approach would be to implement a complex and costly mitigation strategy without a proper risk assessment. This could involve over-engineering a solution for a low-impact risk, leading to unnecessary expenditure and operational disruption. It demonstrates a misunderstanding of the risk assessment process, which requires a proportionate response based on the identified level of risk. Professional reasoning. Professionals in a retail environment like Woolworths should adopt a tiered approach to risk identification and assessment. First, they should attempt to categorize the issue based on their understanding of potential impact and likelihood. If the issue appears to have a low impact and low likelihood, it might be addressed through immediate, informal action. If there is uncertainty, or if the potential impact or likelihood is moderate to high, then a more formal risk assessment process should be initiated. This involves documenting the risk, evaluating its severity, and determining appropriate control measures. Professionals should be trained in their organization's specific risk assessment methodologies and be empowered to use their judgment within those guidelines, knowing when to seek further advice or escalate. Question 14. What factors determine the appropriate level of risk assessment required when considering a proposed operational efficiency improvement suggested by a junior team member that could impact customer data handling processes? Option A. The potential impact on customer data privacy and security, the complexity of the proposed change, and the organization's established risk appetite and regulatory obligations. Option B. The number of other team members who agree with the suggestion and the ease of implementation. Option C. The perceived enthusiasm of the junior team member and the potential for immediate cost savings. Option D. The personal experience of the team member suggesting the change and the general industry trend towards similar efficiencies. The correct answer is A. The potential impact on customer data privacy and security, the complexity of the proposed change, and the organization's established risk appetite and regulatory obligations. Explanation. This scenario is professionally challenging because it requires balancing the immediate need for operational efficiency with the long-term implications of potential risks. A junior team member's suggestion, while seemingly cost-effective, could introduce vulnerabilities that are not immediately apparent but could have significant financial or reputational consequences for Woolworths Group. The challenge lies in assessing the true impact of the proposed change beyond its surface-level benefits, requiring a nuanced understanding of risk appetite and regulatory compliance. The correct approach represents best professional practice because it prioritizes a structured and comprehensive risk assessment process. This aligns with the principles of good corporate governance and regulatory expectations, which mandate that organizations proactively identify, evaluate, and mitigate potential risks. By engaging relevant stakeholders and considering a broad range of potential impacts, the organization ensures that decisions are informed, defensible, and aligned with its overall risk management framework and any applicable Australian consumer protection laws or industry codes of conduct that might be relevant to product safety or customer data. This thoroughness demonstrates a commitment to responsible business operations and safeguarding stakeholder interests. An incorrect approach that focuses solely on immediate cost savings without a proper risk assessment fails to meet regulatory obligations. Such an approach could lead to breaches of consumer law if the cost-cutting measure compromises product quality or safety, or data privacy regulations if customer information is mishandled. It also represents an ethical failure by potentially exposing the company and its customers to undue harm. Another incorrect approach that relies on anecdotal evidence or the opinion of a single individual without systematic evaluation lacks the rigor expected in professional risk management. This can result in overlooking critical risks that are not immediately obvious or are outside the immediate experience of the individual providing the opinion. Such a failure could lead to noncompliance with internal policies and potentially external regulatory requirements for due diligence. The professional decision-making process for similar situations should involve a clear framework. 1. Understand the proposed change and its immediate objectives. 2. Identify potential risks across various categories: operational, financial, reputational, legal, compliance. 3. Evaluate the likelihood and impact of each identified risk. 4. Determine the organization's risk appetite and whether the proposed change falls within acceptable parameters. 5. Develop and implement mitigation strategies for unacceptable risks. 6. Document the entire process and decision. 7. Regularly review and monitor the effectiveness of mitigation measures. Question 15. When evaluating the potential risks associated with introducing a new line of organic baby food, which of the following approaches best demonstrates a commitment to responsible risk management and consumer safety within the Australian regulatory context? Option A. Relying solely on the risk assessment conducted for a previous, albeit similar, line of conventional baby food, assuming the risk profile will be largely the same. Option B. Conducting a thorough risk assessment that identifies potential hazards from sourcing ingredients to final product packaging, considering allergen cross-contamination, supply chain integrity, and compliance with Australian food safety standards, and developing mitigation strategies for each identified risk. Option C. Assigning the entire risk assessment responsibility to the product development team, with minimal input from quality assurance, legal, or consumer affairs departments. Option D. Focusing primarily on the projected sales figures and profit margins of the new product line, assuming that any significant risks will be addressed reactively if they arise post-launch. The correct answer is B. Conducting a thorough risk assessment that identifies potential hazards from sourcing ingredients to final product packaging, considering allergen cross-contamination, supply chain integrity, and compliance with Australian food safety standards, and developing mitigation strategies for each identified risk. Explanation. This scenario presents a common challenge in risk assessment within a retail environment like Woolworths, specifically concerning the introduction of a new product line. The professional challenge lies in balancing the potential commercial benefits of innovation with the imperative to protect customers and the business from unforeseen risks. A thorough risk assessment requires a systematic approach that considers multiple facets of potential harm, not just those that are immediately obvious or easily quantifiable. The correct approach involves a comprehensive identification and evaluation of potential risks, considering both the likelihood and impact of each risk event. This aligns with the principles of good corporate governance and responsible business practice, which are implicitly expected within the Australian regulatory framework governing retail operations. Specifically, it reflects a proactive stance towards consumer safety and product integrity, minimizing the potential for harm to customers and reputational damage to Woolworths. This approach ensures that all foreseeable risks are considered, allowing for the development of appropriate mitigation strategies before the product is launched. An incorrect approach that focuses solely on the immediate financial projections of the new product line fails to adequately consider the potential negative consequences. This oversight could lead to regulatory breaches if it results in the sale of unsafe or non-compliant products, potentially incurring fines or other penalties under Australian consumer law. Ethically, it demonstrates a disregard for customer well-being, prioritizing profit over safety. Another incorrect approach that relies only on historical data from similar, but not identical, product launches is also flawed. While historical data can be informative, it may not capture the unique risks associated with a novel product. This can lead to a false sense of security and an underestimation of potential issues, potentially exposing customers to harm and Woolworths to liability. This approach fails to embrace the principle of due diligence in assessing new ventures. A third incorrect approach that delegates the entire risk assessment process to the marketing department without adequate oversight or input from other relevant functions, such as product development, legal, or compliance, is also professionally unacceptable. This siloed approach can lead to a narrow perspective, missing critical risks that fall outside the marketing team's primary expertise. It undermines the principle of a holistic risk management framework, which requires cross-functional collaboration to ensure all potential risks are identified and addressed. The professional decision-making process for similar situations should involve a structured risk assessment framework. This typically includes defining the scope of the assessment, identifying potential hazards and risks, analyzing the likelihood and impact of each risk, evaluating the significance of the risks, and developing and implementing risk treatment plans. Regular review and monitoring of identified risks are also crucial. This systematic and inclusive process ensures that decisions are informed by a comprehensive understanding of potential downsides, promoting responsible innovation and safeguarding stakeholders. Question 16. System analysis indicates that Woolworths Group is reviewing its approach to risk assessment across its diverse operations. Which of the following methodologies best aligns with the need for effective, proportionate, and regulatory compliant risk management in a large retail environment? Option A. A reactive strategy that focuses exclusively on risks that have resulted in incidents in the past financial year. Option B. A process that mandates exhaustive quantitative analysis for every single potential risk identified, regardless of its perceived severity or likelihood. Option C. A tiered approach that begins with broad risk identification, followed by qualitative assessment to prioritize risks, and then deeper quantitative analysis for high-priority items, considering their potential impact on regulatory compliance and business objectives. Option D. An assessment methodology that prioritizes only those risks that have a direct and immediate impact on short-term profit margins. The correct answer is C. A tiered approach that begins with broad risk identification, followed by qualitative assessment to prioritize risks, and then deeper quantitative analysis for high-priority items, considering their potential impact on regulatory compliance and business objectives. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for proactive risk identification with the practical constraints of resource allocation and the potential for over-analysis. Woolworths, as a large retail organization, faces a multitude of risks across its operations, from supply chain disruptions and cybersecurity threats to employee safety and customer data privacy. The professional challenge lies in determining the most effective and efficient method for assessing these risks, ensuring that critical vulnerabilities are identified and addressed without becoming bogged down in exhaustive, low-impact analyses. This requires a nuanced understanding of risk appetite, regulatory expectations, and business priorities. Correct approach analysis. The correct approach involves a systematic and tiered risk assessment methodology. This begins with a broad identification of potential risks across all business units, followed by a qualitative assessment of their likelihood and impact. Crucially, this approach prioritizes risks based on their potential severity and alignment with Woolworths' strategic objectives and regulatory obligations. For instance, under Australian consumer law and workplace health and safety regulations, certain risks, e.g., product safety, employee injury, will inherently carry a higher priority. This tiered approach ensures that resources are focused on the most significant threats, allowing for more detailed quantitative analysis where necessary, and aligning with the principles of good corporate governance and risk management expected by Australian regulators. Incorrect approaches analysis. Focusing solely on risks with a history of past incidents is flawed because it neglects emerging threats and potential future disruptions that may not have a historical precedent. This approach is reactive rather than proactive and could lead to significant regulatory breaches if a new, high-impact risk materializes. Prioritizing only risks that directly impact short-term financial performance overlooks broader ethical and regulatory responsibilities. For example, a data breach, while potentially having immediate financial consequences, also carries significant regulatory penalties under the Privacy Act 1988, CTH, and reputational damage that extends beyond immediate profit and loss. Implementing a risk assessment process that requires exhaustive quantitative analysis for every identified risk is inefficient and impractical. While quantitative analysis is valuable for high-priority risks, applying it universally would consume excessive resources, divert attention from critical issues, and potentially delay necessary mitigation actions due to the time-intensive nature of such analyses. This can also lead to a failure to meet the spirit of regulatory requirements for proportionate risk management. Professional reasoning. Professionals should adopt a risk assessment framework that is both comprehensive and pragmatic. This involves 1. Establishing clear risk appetite statements aligned with regulatory requirements and business strategy. 2. Employing a risk identification process that captures a wide range of potential threats. 3. Implementing a tiered assessment methodology, starting with qualitative analysis to prioritize risks. 4. Conducting deeper quantitative analysis for high-priority risks where appropriate and feasible. 5. Regularly reviewing and updating the risk assessment to account for changes in the business environment and regulatory landscape. 6. Ensuring that the chosen assessment methods are proportionate to the nature and scale of the risks being managed, in line with principles of sound governance and regulatory compliance. Question 17. Operational review demonstrates that a significant number of potential risks within Woolworths Group's supply chain are difficult to quantify in purely financial terms, such as the risk of reputational damage from ethical sourcing issues or the likelihood of operational disruption due to unforeseen geopolitical events impacting key suppliers. Which of the following approaches to risk assessment would best align with Australian regulatory expectations for a comprehensive and defensible risk management framework? Option A. Focusing exclusively on risks that have a direct and measurable financial impact, disregarding those with primarily non-financial consequences. Option B. A qualitative assessment that systematically evaluates the likelihood and impact of each identified risk, considering the effectiveness of existing controls, and prioritizes risks based on this analysis. Option C. Relying primarily on the subjective experience and intuition of senior management to gauge the significance of these risks. Option D. Prioritizing risks based solely on how frequently they have occurred in the past, without considering the severity of their potential impact. The correct answer is B. A qualitative assessment that systematically evaluates the likelihood and impact of each identified risk, considering the effectiveness of existing controls, and prioritizes risks based on this analysis. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient operational risk assessment with the imperative to comply with Australian regulatory expectations for a company like Woolworths Group. The challenge lies in identifying the most appropriate method for assessing risks that are not easily quantifiable, ensuring that the chosen approach is robust, defensible, and aligns with the principles of good corporate governance and risk management as expected by Australian regulators. The correct approach represents best professional practice because it prioritizes a systematic and documented process for identifying, analyzing, and evaluating risks, even those that are qualitative in nature. This aligns with the principles of the Australian Standard /NZS ISO 31000, 2018 Risk Management Guidelines, which emphasizes a structured and iterative approach to risk management. By focusing on the likelihood and impact of identified risks, and then considering the effectiveness of existing controls, this method provides a clear framework for prioritizing mitigation efforts. This systematic approach ensures that resources are allocated effectively to address the most significant risks, thereby enhancing the overall resilience of the organization and demonstrating due diligence to stakeholders and regulators. An incorrect approach that relies solely on subjective judgment without a defined framework fails to provide a consistent or auditable basis for risk assessment. This can lead to biases, overlooking critical risks, or overemphasizing minor ones, which is a failure to meet the standards of due diligence expected under Australian corporate law and the principles of good governance. Another incorrect approach that focuses only on the potential financial impact, while important, neglects other significant risk categories such as reputational damage, operational disruption, or regulatory noncompliance, which can have equally severe consequences for a large retail organization. This narrow focus is insufficient for a comprehensive risk assessment. A third incorrect approach that prioritizes only the most frequently occurring risks, without considering their potential severity, can lead to underestimation of catastrophic but less frequent events, leaving the organization vulnerable to significant disruptions. This demonstrates a failure to adequately consider the full spectrum of potential risk exposures. Professionals should employ a decision-making framework that begins with understanding the organization's risk appetite and objectives. This is followed by a systematic identification of potential risks across all relevant categories. For each identified risk, a qualitative assessment of likelihood and impact should be conducted, considering both current and potential future scenarios. The effectiveness of existing controls should then be evaluated. Based on this analysis, risks should be prioritized and appropriate treatment strategies developed and implemented. This process should be documented, regularly reviewed, and communicated to relevant stakeholders, ensuring a continuous improvement cycle in risk management. Question 18. Market research demonstrates a growing consumer demand for ethically sourced and sustainably produced goods, alongside increasing pressure to reduce operational costs. Woolworths is considering a strategic initiative to streamline its supplier onboarding process to achieve cost efficiencies. This initiative proposes a significant reduction in the depth and frequency of independent quality and safety audits for new and existing suppliers, relying more heavily on supplier self-assessments and initial documentation review. What is the most appropriate approach to manage the potential risks associated with this proposed change? Option A. Immediately implement the proposed reduction in supplier vetting to realize cost savings, assuming that most suppliers already adhere to high standards. Option B. Replace all independent audits with supplier self-declarations of compliance, as this is the most cost-effective method of supplier verification. Option C. Delegate the entire responsibility for assessing supplier compliance to the procurement team, trusting their judgment in negotiating terms that implicitly ensure quality. Option D. Conduct a comprehensive risk assessment involving quality assurance, legal, and procurement to identify potential product safety, regulatory compliance, and brand reputation impacts, and develop mitigation strategies before implementing any changes to supplier vetting processes. The correct answer is D. Conduct a comprehensive risk assessment involving quality assurance, legal, and procurement to identify potential product safety, regulatory compliance, and brand reputation impacts, and develop mitigation strategies before implementing any changes to supplier vetting processes. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate need for cost-saving measures with the long-term implications of potentially compromising product safety and brand reputation. Woolworths, as a major retailer, has a significant responsibility to its customers to ensure the products it sells meet stringent safety and quality standards. A hasty decision to reduce supplier vetting without a thorough risk assessment could lead to the introduction of substandard or unsafe products, resulting in customer harm, product recalls, regulatory penalties, and severe damage to Woolworths' trusted brand image. The pressure to reduce costs is a common business driver, but it must be managed within a robust ethical and regulatory framework. Correct approach analysis. The correct approach involves conducting a comprehensive risk assessment that explicitly considers the potential impact on product safety, regulatory compliance, and brand reputation. This assessment should involve cross-functional teams, including quality assurance, legal, procurement, and operations. It requires identifying potential hazards associated with less stringent vetting, evaluating the likelihood and severity of these hazards materializing, and developing appropriate mitigation strategies. This aligns with the principles of responsible business conduct and the regulatory expectation that companies proactively manage risks to prevent harm. For Woolworths, this means adhering to Australian consumer law, food safety standards, and its own internal quality policies, all of which mandate a commitment to product integrity and customer well-being. Incorrect approaches analysis. Implementing cost-saving measures by simply reducing the frequency or depth of supplier vetting without a formal risk assessment is a significant regulatory and ethical failure. This approach prioritizes short-term financial gains over customer safety and legal obligations. It demonstrates a disregard for the potential consequences of introducing unsafe products, which could lead to breaches of the Australian Consumer Law Act regarding consumer guarantees of acceptable quality and safety. Ethically, it violates the trust placed in Woolworths by its customers. Another incorrect approach would be to rely solely on supplier self-declarations of compliance without independent verification. While supplier declarations can be a part of the process, they are not a substitute for due diligence. This approach fails to acknowledge the inherent risk of misrepresentation or oversight by suppliers and neglects Woolworths' responsibility to ensure compliance. This could lead to non-compliance with specific industry regulations, e.g., food standards, and a failure to meet the duty of care expected of a major retailer. A third incorrect approach would be to delegate the entire responsibility for supplier vetting to the procurement team without involving quality assurance or legal departments. Procurement's primary focus is often on price and contract terms, and without input from other specialized departments, critical safety and compliance risks might be overlooked. This siloed approach fails to integrate a holistic understanding of risk management, which is essential for ensuring that all aspects of product integrity are considered, from sourcing to sale. This can lead to regulatory breaches and ethical lapses by failing to uphold the comprehensive duty of care. Professional reasoning. Professionals should adopt a structured risk management framework. This involves 1. Identifying potential risks. What could go wrong if supplier vetting is reduced? 2. Analyzing risks. How likely are these risks and what would be the impact? 3. Evaluating risks. Which risks are unacceptable and require mitigation? 4. Treating risks. What actions can be taken to reduce or eliminate unacceptable risks? 5. Monitoring and reviewing risks. Are the implemented controls effective, and do new risks emerge? This systematic process ensures that decisions are informed, defensible, and aligned with regulatory requirements and ethical principles, prioritizing the safety and trust of consumers. Question 19. The assessment process reveals that a significant number of candidates are proceeding through the initial stages of the Woolworths Group hiring assessment without explicitly confirming their understanding of how their personal data will be collected, stored, and utilized throughout the recruitment lifecycle. The hiring team is under pressure to expedite the assessment timeline. Which of the following approaches best upholds regulatory compliance and ethical best practice in this situation? Option A. Inform candidates that data collection is a mandatory part of the assessment and that they must agree to the terms to continue, without detailing the specific purposes or usage of the data beyond the immediate assessment stage. Option B. Proceed with the assessment as planned, assuming that a candidate's participation implies consent for data collection, and provide a general privacy notice at the end of the entire recruitment process. Option C. Immediately halt the collection of any further personal data until a clear and explicit consent mechanism is implemented, ensuring candidates are fully informed of the data's purpose and usage before proceeding. Option D. Collect only the most basic personal details deemed absolutely essential for identification, without seeking explicit consent, as these are unlikely to be considered sensitive information. The correct answer is C. Immediately halt the collection of any further personal data until a clear and explicit consent mechanism is implemented, ensuring candidates are fully informed of the data's purpose and usage before proceeding. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for efficient data collection with the ethical imperative of obtaining informed consent. The pressure to meet assessment deadlines can create a temptation to streamline processes, potentially at the expense of thoroughness. Professionals must exercise judgment to ensure that the assessment process is not only effective, but also respects the rights and privacy of candidates, adhering to relevant Australian privacy principles and Woolworths' own ethical guidelines. Correct approach analysis. The correct approach prioritizes obtaining explicit and informed consent before collecting any personal data. This aligns with the Australian privacy principles, APP, particularly APP3, use or disclosure of personal information, and APP5, collection of solicited personal information, which mandate that individuals be informed about the collection of their personal information and the purposes for which it will be used. Woolworths' commitment to ethical hiring practices would also necessitate this transparency. Obtaining consent ensures candidates understand what data is being collected, why, and how it will be used, fostering trust and compliance. Incorrect approaches analysis. One incorrect approach involves proceeding with data collection without explicit consent, relying on implied consent or the candidate's participation in the assessment as sufficient. This fails to meet the requirements of the APPs, which generally require positive consent for the collection of personal information, especially sensitive information. It also breaches ethical standards by not being transparent with candidates about data handling. Another incorrect approach is to collect data, but delay informing candidates about its purpose until after the assessment is complete. This is a violation of APP 5, which requires notification at or before the time of collection. Such a delay can lead to a perception of deception and undermine trust, potentially leading to complaints and reputational damage for Woolworths. A further incorrect approach is to collect only minimal data deemed necessary, without clearly explaining the necessity or obtaining consent for that specific data. While data minimization is a good principle, it does not negate the requirement for informed consent. Candidates have a right to know what data is being collected, even if it appears minimal, and to consent to its collection. Professional reasoning. Professionals should adopt a framework that begins with understanding the regulatory landscape, Australian privacy principles, and the organization's ethical commitments. Before any data collection, a clear communication plan should be established to inform candidates about the assessment's purpose, the types of data to be collected, how it will be stored and used, and their rights regarding that data. Consent mechanisms should be explicit and easily understood. Regular review of assessment processes to ensure ongoing compliance and ethical integrity is also crucial. Question 20. Benchmark analysis indicates that a key supplier for Woolworths' popular house brand biscuits is proposing a significant reduction in the quality of a core ingredient due to rising costs. This change, if implemented, would subtly alter the texture and flavor profile of the biscuits, though they would still meet minimum internal quality specifications. The marketing department is concerned that disclosing this change might negatively impact sales, and there is pressure to proceed with the substitution without explicit customer notification, relying on the fact that the change is not drastic enough to be immediately obvious to most consumers. Which of the following approaches best aligns with Woolworths' obligations under Australian consumer law and ethical retail practices? Option A. Proceed with the ingredient substitution and proactively communicate the change to customers through in-store signage and website updates, clearly explaining the reason for the alteration and its minimal impact on the overall product experience. Option B. Implement the ingredient substitution and update product packaging with a subtle disclaimer about potential minor variations in formulation over time, without specifically detailing the change. Option C. Reject the supplier's proposal and explore alternative suppliers or cost-saving measures that do not involve compromising product quality or transparency, even if it means a higher immediate cost. Option D. Implement the ingredient substitution and rely on existing product information, assuming that minor variations in taste and texture are an acceptable part of consumer expectations for mass-produced goods. The correct answer is B. Implement the ingredient substitution and update product packaging with a subtle disclaimer about potential minor variations in formulation over time, without specifically detailing the change. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for cost reduction with the long-term implications for customer trust and regulatory compliance. Woolworths, as a major retailer in Australia, operates under strict consumer protection laws and ethical guidelines that mandate fair trading practices and accurate product representation. The pressure to cut costs by reducing the quality of ingredients without clear communication to customers poses a significant risk of misleading consumers and potentially breaching Australian consumer law ACL. The correct approach, which involves transparently communicating any changes in product formulation to customers, represents best professional practice. This aligns with the ACL's prohibition against misleading or deceptive conduct and unfair practices. By informing customers, Woolworths upholds its ethical obligation to provide accurate information, allowing consumers to make informed purchasing decisions. This proactive communication fosters trust and mitigates the risk of reputational damage and regulatory penalties. An incorrect approach that involves substituting lower-quality ingredients without disclosure is a direct violation of the ACL. Specifically, it could be considered misleading conduct under Section 18 of the ACL, which prohibits conduct that is misleading or deceptive, or is likely to mislead or deceive. Furthermore, failing to disclose material changes to a product's composition could be deemed an unfair practice, potentially leading to investigations by the Australian Competition and Consumer Commission, AC, and significant fines. Another incorrect approach, such as relying solely on internal quality control without external verification, fails to adequately address the potential for customer perception of deception, even if the product technically meets internal standards. This overlooks the importance of consumer expectations and the broader ethical imperative of transparency. The professional decision-making process for similar situations should involve a thorough risk assessment that considers not only financial implications, but also legal, ethical, and reputational consequences. This includes consulting with legal and compliance teams, assessing the potential impact on customer trust, and exploring alternative cost-saving measures that do not compromise product integrity or transparency. When product changes are unavoidable, a clear and honest communication strategy with customers should be developed and implemented, ensuring that all relevant information is readily accessible.